Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. It's Thursday, the 2nd of February, and we have our regular Thursday guest, David Kuo, founder of the Smart Investor out of Singapore. David, as always, good afternoon. Great to have you on the show.
Salamat tengah hari, Brian. Yes, it's good to be here on a Thursday.
Now, we've got a lot to unpack today, David, but before we get your sagely insights, let's take a look and see what the numbers look like across the region. We're going to start with crypto markets. Bitcoin is at 23,901. It's up 3.31%. Ethereum is at 1,674. It's up 5.81%. Now, looking across to regional equity markets, we've got the SGX, which bucks the general trend across the region. It's down 0.42%. But over at Bursa Malaysia is down is up 0.15%. Shanghai is up 0.25%. The ASX All Ordinaries is up 0.27%. The Nikkei is up 0.26%. The Hang Seng is up 0.44%. And rounding up the numbers, we've got the Kospi, which is up 0.9%. David, your view on market performance in the first half of the day?
Well, I think we're just simply responding to what went on in Wall Street last night. Everybody was on tenterhooks yesterday, waiting for the Federal Reserve's interest rate decision. It duly arrived, quarter point, no surprise there. Everybody was expecting a quarter point, but it was really what Jerome Powell said afterwards. And as a result of that, we saw in the US a sharp turnaround in the three indices, and we had gains both in NASDAQ, the SPX or the S&P 500, and also the Dow Jones. And so we had this sort of follow-on buying today over here in Asia, with the slight exception of Singapore.
David, I want to get your insights in terms of your interpretation of what Jerome Powell said, because he didn't say deflation, for one thing. He said disinflation.
Yeah, I know. And I think many people got the wrong end of the stick, but there were lots of people out there who were hoping, that maybe the interest rate hikes by the Federal Reserve has probably come to an end. But what Jerome Powell said yesterday was that he is seeing signs of disinflation in the market. That's not the same as deflation, right? They are two completely different words. Deflation means that prices are coming down. Disinflation means that prices are not going up as fast, right? So he is still very aware of the fact that there is inflation in the system. And he also said that it is quite likely that interest rates will not be cut in 2023. And there may also be a couple more interest rate hikes in 2023. But people hear whatever they want to hear. And they heard disinflation as being deflation. And they also heard that no interest rate cuts as meaning no interest rate rises. But all of those are wrong. There is still inflation in the system, and he's going to be watching the jobs market very closely, because the jobs market is really what determines will happen to inflation over the longer term. Once you give people pay rises, then those pay rises are definitely going to stick, and it's going to be very impossible to take back the pay rise that you've given to employees. So he's watching that very carefully. But a lot of people jump the gun. In particular, maybe some people here in Singapore who, as you quite rightly mentioned, the Singapore market didn't quite join the rally as the rest of the markets here in Asia. And that was primarily because of the banks, in particular DBS Bank. So maybe people thought, hey, if there's going to be no interest rate increases, then let's get out of the banks. But I think that's the wrong message to take away from last night's Fed meeting.
Now, David, I want to switch our attention to India now. And the big news is the Adani axing their share sale of 2.5 billion. Now, this is despite the fact that it was fully subscribed. In fact, the 5 biggest, richest families in India also said that they would back the sale. Yet, they've pulled it out of the market. Now, what is your view on this particular instance and also then the broader Indian market?
Okay, right. It kind of shows what the old boys network can actually do. When you get India's richest man ringing you up and saying, hey, I've got this FPO coming along. Can you subscribe just to help me out? And they go, yeah, okay, yeah. What is it? A couple of billion here and there. Yeah, okay, that's fine. I got plenty of money in my back pocket. So I'll subscribe to those sales. But what really worries the market is that Mr. Adani has not addressed the issues from Hindenburg Research. And what Hindenburg is saying is that there are some accounting problems there. And instead of addressing the problems, Mr. Adani started to pull the nationalistic card. And he said, this is not an attack against my company. This is an attack against India. And the moment you do that, the moment you start using those kind of spurious arguments, then I think, people are going to be very worried. And I'm not entirely surprised. In particular, the bondholders out there are marking down the value of the Adani bonds outside of India. And they're saying that maybe the bonds really aren't worth as much as they are. But in terms of the Indian market, I remember as far back as the Infosys days when there was some talk about some accounting irregularities at Infosys, and there was another company called Satayam. There were some irregularities going on there also. So irregularities in markets are not unusual. We here in Singapore, can't sort of claim to be whiter than white simply because we've had our problems as well with certain companies being challenged with regards to their trading practices and also their accounting principles. And of course, you have America, you have the UK. These things happen in markets. But I don't think we can taint the entire Indian market with the same brush, Brian. We can't really do that. We have to sort of say that this is a specific issue, and there are some great companies in India that people can really look at. And with that, I have one caveat, and that is that we, and by we, I'm talking about me and people who are non-Indian, of non-Indian descent, can't easily buy Indian companies. We can buy the index, and we can buy the ADRs, these Indian companies that are listed over in America, but we cannot buy Indian shares directly. Maybe this will change over time if India decides to join the club and open up its markets to other people. But for now, all I can say is that within India, within the Indian Stock Exchange, there are some great companies, Brian. I mean, I own shares in an ADR in a company called what is it called?
It's HDF or something like that.
HDFC, right? That's right. The Housing Development Corporation, Finance Corporation of India. And it is a bank that lends money to people who want to buy homes. So I can only buy that through an ADR. There are other companies like Hindustani Unilever. That's a great company. But if you don't want to play the Indian market directly, and apart from that, there's loads of other companies. The Tata conglomerate companies are all listed in India. But one way of playing the Indian market, and when you have a look at what is happening in India, it is that household wealth is starting to increase in India. And so therefore, that is really sort of a call to everybody to have a look very closely at consumers and companies that are targeting or looking at the Indian consumers, the ability for them to spend money. And Starbucks is one company that has joined forces with Tata over in India, and they're expanding their coffee chain in India. And the idea of people in India preferring coffee to tea might seem a bit unusual, but we saw this happening in China. And I think people who are looking at the Indian market now may want to refer back to China about 10, 15 years ago, when there were lots of companies that were looking at opportunities. So the likes of Yum Brands that owns Kentucky Fried, companies like McDonald's, Starbucks. I mean, these are companies that decided that, yes, the Chinese consumer was worthwhile looking at because of their rising income. And in the same way, we can do the same with India. We can have a look at companies that directly or indirectly are involved in looking at the Indian consumer and their rising income and the ability for them to spend money, Brian.
Now, David, on that note, I want to touch now on another sort of share spike that's happened. But this, in the US, Meta announced its earnings and announced a huge share buyback. What are your thoughts on Meta's moves?
Well, the reason why Meta shot up so quickly was because it was, it had announced that it was going to be buying back its shares. And I think this is almost a recognition by companies such as Facebook that has plenty of cash available to it, that the share price is not going to be rising as a result of the valuations. In other words, the PE ratios are going to remain relatively subdued. And the only way that the share price of any company, not just Meta that owns Facebook, but any company, the only way that the share price is going to actually show any kind of improvement would be if the earnings per share starts to increase. And one very quick way of improving your earnings per share, Brian, is to actually buy back your shares, cancel the shares, so that if the earnings were stagnant and you had a smaller pool of shares out there, the EPS will go up. And so I think that is what some people might call financial engineering, or manipulating their share price, but essentially that is what is going on. And I think Meta is just simply accepting the fact that growth is going to remain relatively slow, and the only way that the share price can go up will be through the earnings per share rather than a re-rating of the shares, because the PE ratio is going to be dampened down by relatively high interest rates from the Federal Reserve for the whole of 2023.
Now, David, on that note, thank you very much for your insights, and thank you for coming on the show again this Thursday.
Thank you.
Now, we've been speaking to David Kuo, founder of The Smart Investor, on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.